Hey everyone, let's take a deeper dive into ChargePoint and look at ChargePoint's latest financial statement to learn a little bit more about this EV charging company, its prospects, and why the stock has struggled so much in recent months and recent years.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with the overview that ChargePoint management gives us from their latest 10Q statement. So ChargePoint says that it designs, develops, markets networked electric vehicle charging system infrastructure to enable charging systems owners or hosts to manage their network charging systems and to enable drivers to locate, reserve, authenticate network charging systems and to transact EV charging sessions on those systems. Essentially, they provide these charging systems and then they provide the energy in those charging systems. So they not only sell those physical charging units, but then they also sell the energy. So you can go with ChargePoint and buy the recharging from them. So they offer the physical and the service. It's a two-pronged business here. So they target here three key verticals. So they target commercial customers. These are places like a university, for example. The university that I teach at has ChargePoint level 2 charging systems on campus where students can charge their electric vehicles. They're always empty, but that's regardless. They have them there in case students do want to charge their EVs. They also offer their services to fleets and residential. So commercial customers have parking places largely within their workplaces and include retail, hospitality, healthcare, fueling, convenience, and parking lot operators. The fleet segment includes municipal buses, delivery, work vehicles, port, airport, warehouse, and other industrial applications, ride sharing services, and it's expected to eventually include autonomous transportation. So, all of that are reasonable customers. Residential includes single family homes and multifamily residences. These could be lucrative, but it would be more challenging for ChargePoint because you can imagine they would need to contract with individual homeowners or sell to individual homeowners or individual apartment owners, and selling these units one at a time or four at a time is not really going to ramp up quickly enough for ChargePoint to help all of its losses on the bottom line. Speaking of the losses on the bottom line, so far ChargePoint has incurred net operating losses and negative cash flow from operations in every year since inception. As of October 31st, 2023, ChargePoint has accumulated a deficit of $1.519 billion. So it says 1,519, which translates into $1.59 billion in losses so far to build the company to where it is today. Now it has expanded significantly. It's the number one charging provider of level 2 chargers in North America, but it's come at a hefty price. It's come at a hefty cost. So ChargePoint is currently a market leader in North America in commercial level 2 alternating current AC charging. ChargePoint operates in North America and several countries, including Europe. Europe is expected to be a significant contributor to ChargePoint's revenue in future years. Europe has pretty good potential for charging stations and EVs because the price for fuel is much higher on average in Europe than it is in the US and North America. And so it becomes a more economical choice for consumers to switch to EVs in Europe versus here in the US, where it's much more expensive to switch to an EV and it's less convenient. So customers are left asking, why would I switch to an EV? It costs more, it's less convenient. So why would I do that? And so that's why it's been slow going for EVs and charging stations. despite all of the government stimulus, incentive, and mandates to try and really encourage this technology, it's been slow. It's been slow considering all of that incentive. So there are numerous restrictions and requirements associated with qualifying for the electric vehicle tax credit available under the IRA, and ChargePoint is still assessing how the IRA may impact its business and EV sales generally. Despite the IRA being passed in 2022 on August 16th, ChargePoint is still assessing how the IRA may impact its business. You would think that a business that relies so significantly on these government incentives would have figured out the impact of the business and how they can align themselves to benefit from this, but not ChargePoint, not yet. They need more time. They need more than the year and a half that they've already had since the law has passed to see the impact. So further, the incentives such as the Jobs Act and the IRA take time to be dispersed and to affect actual expenditure decisions. And that is true. The government takes forever, even after these laws passed, and they provided $7.5 billion for EV charging along highway corridors and communities. The government will take forever to actually disperse those funds. You've got to fill out a bunch of forms. They've got to review. They probably ask for something back. You've got to adapt and review. It's going to take a long time. That's just how the government works. They don't do anything fast. And so this is going to be difficult. And that's why I've been saying for any of these companies that rely on the government incentives and mandates for their survival, that's a risky proposition. I would not put my money on any business that is relying on these government mandates and incentives for survival. I wouldn't risk my own money, and I wouldn't advise anyone else to risk their own money if they're hoping that the government is going to help and sustain and maintain these businesses, because I'm skeptical that they're going to do so or do so in a timely manner. And I'll end the video with this last but very important highlight of how ChargePoint operates the business. So ChargePoint uses contract manufacturers to manufacture the substantial majority of its network charging systems. ChargePoint's in-house manufacturing is typically limited to initial development units and to just some few early customer samples. ChargePoint cost of revenue for the sale of network charging systems includes the contract manufacturer's costs of finished good and shipping and handling. So an important thing to note with this kind of business model is that it limits the expansion of profitability for a company that uses outsourcing, because as you ramp up production, as you ramp up sales, your cost of goods sold increases along with your revenue. You're not getting the leverage where if you had the manufacturing in-house and you were producing a certain amount of units and you increase the amount of units you produce, your cost per unit declines meaningfully faster. Now, with these contract manufacturers, maybe your cost of unit will decline if you're able to negotiate a better deal. Maybe. But right now, that negotiating power is non-existent for companies like ChargePoint, where suppliers actually go back to them and say, you know what, why should we risk planning a partnership with you when you're losing so much money and your existence is in question? You've already lost, we've seen $1.5 billion, and your losses on the bottom line are just getting worse. So why would I, as a supplier, enter into an agreement with you when your future is questionable? And so right now, they don't have that negotiating power. I don't know when or if they ever will. This is just the reality of the business. So they've got some work to do here at ChargePoint, and I hope this has highlighted why the stock price has been down as much as it's been. The business is just in a difficult position with no real signs of improving anytime in the near term. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.